What's the way forward for Indian currency in the near term? Let's discuss that, and let's understand that with K. Harrier, Treasurer with FirstRand Bank, joins us live from Mumbai. Harrier, morning. Thank you for joining us. Looks like we will start from where we left on Friday. Rupee will open below 57.
Yeah, it looks like it. I think overall, as you correctly mentioned, yesterday the markets had gone and expected, I suppose, just too much, and I think there were rumors of 12 steps and those kind of numbers. And in that context, I think the kind of 3 or 4 steps that were announced were probably not up to the market expectation. But I think it's interesting to also note that in anticipation of such measures coming, you saw the way the rupee strengthened quite a bit. So this clearly proves one thing, that sentiment is clearly negative, but the fundamentals may not necessarily be as bad as the sentiment sounds. And the markets deliberately deciding to ignore the fact that crude prices have come down substantially, commodity prices have come down substantially, foreign investors are not selling all over the place. Moody's has still overall, while reiterating the negative outlook, has not really sounded as negative as the other rating agencies. But the fact is that irrespective of whatever measures that the Reserve Bank of India or the government might do, the bigger move and the more fundamental and structurally lasting move will only come when the exporters of the country start selling their forward dollars. And that's where the sentiment comes in, because if the whole market, rightly or wrongly, believes that you're going to see 58 or 60 on the boards, then if you are an exporter, it's very natural that you're not going to be offering your dollars into the marketplace, even if you get 3 rupees on the forward as a premium. So right now, that is a situation where the exporters are not giving away their dollars, which is 25 billion a month, and as per the law, they can actually sell their forward dollars, and the importers are coming big time into the marketplace. Having said this, to answer your question, yes, I think the rupee will continue to have a weakish tone, because the whole emerging market pack is looking weak, not necessarily today, but as a trend, it's looking weak. But we are now coming to levels where the market's really seeing the rupee as oversold, and really at some stage when the retracement happens, you want to see probably a sharp retracement, the kind you saw in January, where the FIs led the surge into the stock market and also caused a surge in the rupee rate.
Harry, let's chat about RBI's moves yesterday in detail. The first one being specifically with regards to increased investment limit in government bonds to $20 billion. Given how wary foreign investors are at this point in time, how exactly will this help? And the ECB limit, which has been hiked to about $10 billion, do you see this as easing demand in the local bond as well as the forex market?
Well, in terms of interest, I think the government security quota of the FI quota has always been a very well sought after sector, and therefore we expect the demand in the government government security segment to be very strong, and especially because you've now also simultaneously permitted entities like sovereign wealth funds to come in. So that we expect to be a positive for the market. But having said that, it's probably more positive for the bond market and for the corporate borrowing program than necessarily for the dollar rupee market. The reason is, in today's market, any foreign investor who pumps money into the Indian market is normally going to hedge his position, and therefore, in terms of the forex market dynamics, you're going to not see a net supply of dollars into the market, because they would on the one hand sell spot dollars and on the other hand buy forward dollars. So you really don't see net supply of dollars into the market. But the government borrowing program, even if there is a bit of an overshoot, will see ready, a sellability of the bonds that might have to be issued. Similarly, to the extent the corporate markets want a diversified source of funding, the bond market will get an international buyer of a larger amount. So the corporate bond market has traditionally been less attractive to the foreign investors and will continue to remain so, but the government securities market will continue to remain attractive. As far as your other point is concerned, the ECB, well, it's a welcome relaxation, but I don't know how much of, shall we say, effect that's going to have on the marketplace, because while you can now clearly borrow and refinance your Indian debt in case you have export earnings, the fact is that the forward premiums are not low. The fact is international borrowing rates are not necessarily going to be very low, considering the kind of talk on ratings. So when you load a LIBOR plus a spread of 300, 400 plus a forward, the Indian bond market may actually be looking attractive unless you're going down the credit ladder. And I'm assuming that we're not talking of those kind of companies. And at the top end, I think the bond market Indian bond market remains a better way to kind of fund yourself. But it just opens up a diversified kind of stream of funding for yourself. So if the forwards, for whatever reason, were to collapse, then that might become one more mathematically smart alternative to refinance your rupee borrowings.